when you have the purchasing power to be able to spend, and you have a situation, the classic information of too much money chasing too few goods. But I think we had a cost push, we had a cost push inflationary problem. And that is why I'm thinking that we need to be able to make that move of cutting those rates. Because if we don't cut those rates, we will not be able to provide the stimulus to be able to grow the economy, which should be the overall objective. And I think the downward trend, I think the downward trajectory of inflation, we should be able to see that through to the end of the year. And I think if you take a look at the growth patterns, when Nigerian economy was growing about 8.5%, inflation was actually at about 11, 12%. So that level of inflation is still acceptable if you're able to sustain a growth of about 8%. So that is my own argument in terms of that perspective. And there are other issues which we need to look at, which would also include the foreign exchange.
Now, what about the upcoming election? Don't you think that the committee will probably have to consider that?
No, they don't have to consider the election. The variability of the election, elections come and go, and the responsibility of the monetary policy is to be able to maintain financial stability, which despite or in spite of elections, you must maintain financial stability, and you must control variable rates so that you have a stable economic framework. So the elections would come and go, but the Monetary Policy Committee would always look at the numbers and the variables to ensure that the financial system is stable.
Okay, you are of the opinion that it's time for the MPC to begin to ease rate, but they just have new members constituted into the committee. Having seen this set of people, looking at them, do you think they could be hawkish or dovish? How would you describe them? Do you think they would have to take that decision now to ease rates?
Well, unfortunately, I don't really know the full profile of most of these, the MPC members as to their positioning. But obviously, this will be a first test because obviously, right these days, a lot of their opinions are published so that we can begin to see how they stand or how they see things. So this first meeting, I think, will help us define and determine which direction most of the MPC members are looking at policies. But I think another thing the MPC can help to influence, I think, is the foreign exchange rate. My own opinion on the foreign exchange is that I think because of the level of reserves we have now and the sort of foreign exchange system we're running, we need to be able to remove a lot of the distortions in the foreign exchange mechanisms. Because if we do, considering the level of reserves we have and the fact that the Naira hit a high of about 500 to 1 against the dollar at a point in time, if we take a look at that perspective, then clearly the Naira should be trading at between a window of 220 to 250 Naira now. So I think that the Naira is not trading at the right position. So I think that the Naira should be able to appreciate because of the level of reserves that we have. And the fact that the central bank was able to sustain close to $15 billion into the system last year. And I think there's a lot of stability and confidence that has returned to that market through this NAFEX trading window. So what I think the central bank should do also, or the MPC should try to influence, is to be able to see some conversions in rates, let us see some transparency, remove the distortions, and get Naira to start trading between 220 and 250.
So you think multiplicity of exchange rates is still an issue?
Yeah, it's causing a lot of distortions in the market. And I think that clearly, with the level of reserves, I think 250, I think, is a reasonable rate for the Naira now, which will also spur growth. And I think it's time for us to see the Naira begin to appreciate, and then you need to be able to drop rates to a reasonable rate that is going to spur growth. Because this inflation that we're looking at, I think, is limited to food inflation. So dropping rates, I think, will help significantly.
Now, the I&E window, seem to have recorded quite a lot of inflows. Are you satisfied with that?
Yes, I think they've done a good job with that. I think everybody accepts that the central bank has done a good job with that particular market-driven window. But because of the other multiplicity of rates, you cause distortions in markets, which you're not able to see the transparency. But if we had that transparency, that's why I'm saying that with that transparency, one single window for all transactions, we'll see the Naira trading at close to 250 Naira to the dollar, easily.
Okay. Right, you're one of those proposing easing of the policy rate. Now, a major justification for that is the current high debt servicing costs of the federal government. And to address this, the federal government seemed to be leaning towards external source of funding. I know that sometime last year, the National Assembly had approved about 5.5 billion US dollars, externally. What's your view on this?
It's very simple. I mean, your domestic debt service, treasury bills are at 18%. And you could do your debt service in dollars for like 6 or 7%. I think that was the rate for which we got our last instrument. But don't forget that the U.S. Treasury rates are close to about 1% or 2%.
Oh, but do you think the risk returns have, actually been considered?
Yes, I think it's fine. I think because it's cheaper. I mean, at the end of the day, the government is paying less for servicing debt because by shifting your portfolio to dollars, dollar borrowings are cheaper than Naira borrowings at 18%. So basically, you reduce your cost of debt service. And if you also drop your rates, which you need to do to be able to stimulate growth in the economy, because the people benefiting now are the banks and investors who are making money at 18%. So there's no incentive to lend to the real sector at this particular time and with this policy. But if you drop your rates, then investors will look for other assets in the equity markets.
Right.
And of course, the real sector will have cheap funding that will stimulate growth in the economy.
All right, thank you very much for your time, Mr. Adebajo. Tilewa Adebajo is an economist and the CEO of the CFG Advisory. We'll take another break, and when we come back, the U.S. consulate drives entrepreneurship in Nigeria. Do stay with us.